Well, good afternoon, everyone, and welcome to the online experience and sharing your time with us today. With COVID-19, we're seeing major shifts in the economy, and we're having to adapt to new ways of doing business, not only locally, but globally. I'm Victoria Bright, Director of Programs and Engagement at TechAlliance. And as the Regional Innovation Center for Southwestern Ontario at TechAlliance, we're committed to innovative companies who are launching, scaling, and competing globally through our advisory services, our programs, and our accelerator. To bridge through this difficult time, TechAlliance is creating new experiences like today's webinar to deliver support and collaboration with our business community, our partners, industry experts, and to really bring you up-to-date information and the resources available to help you. So the Government of Canada announced recently on March 13th a stimulus package with an additional $10 billion in funding, and some of those funds are being streamed through Export Development Canada. So we're very pleased to be hosting today's session in partnership with the EDC on managing the impact on global supply chains. So before we get started, a few key points to mention. Everyone's microphone is actually muted. So if you have any questions as we go along, please submit them through the Zoom's Q&A feature on the bottom of your screen, and we'll monitor them and they'll be answered at the end. This is also a recorded session, and you will be sent a link to the recording afterwards. So let's get started with Cam Ellis from Export Development Canada. Cam is an account manager with EDC, and he works with companies to accelerate their business plans. He leverages a suite of financial, bonding, and risk mitigation products, and he's focused on creating trade by putting Canadian companies in contact with international business relationships that he has and EDC representatives all around the world. So Cam is a wealth of information, resources, and contacts. So please join me in welcoming Cam. And I'll put it over to you, Cam.
Hello, Victoria. Thanks very much for having us here today. How's the sound quality over there? Can you hear me all right?
Yeah, I can hear you fine.
Okay, perfect. Yeah, I just wanted to make sure that we've got at least some level of connectivity with half of Canada working from home, it seems, today. So I would like to say thanks again for everybody for making some time today, and TechAlliance and their team for putting us in contact. I'd like to be able to tell everybody here on the call today that I do have all the information in front of me, but unfortunately, as I think everybody's aware, it's a pretty fluid situation. So ideally at the end or by the end of the call, what we'd like to have is a little more information out there into the market, and more importantly, resources available that you can draw on in a sort of a self-help method, although I'm always available if you'd like to reach out to me directly. Just so going into this, as again, it's a very fluid situation, everybody has access to some of the resources which have been expended by Export Development Canada in order to, let's say, put some more tools in the toolbox as you're getting inquiries, as you're looking at some of the, in some cases, unprecedented business conditions that we're seeing out there today. So again, this was a PowerPoint that I'd used previously, and I think that message from the chief economist is in order. There is quite a bit of information on www.edc.ca. And Peter Hall's point again was that although we are facing some choppy waters ahead, there may be some opportunities going into this. As long as we've been able to weather the storm. So next slide, please, maybe for some of the folks that haven't chatted with or I haven't chatted with about Export Development Canada in the past. So we're very similar to a business development Bank of Canada or a Farm Credit Corporation. We are a Crown Corporation which was stood up at the end of the Second World War. The idea around Export Development Canada is to devise and work with clients, in most cases, to come up with solutions to assist them in taking on some of the opportunities that they see doing business outside of Canada, as well as mitigate some of the risks, both to the companies themselves as well as the financial institutions that they're working with. This does allow, again, in some circumstances, allows them to take on opportunities which they may not be able to take on themselves. And in that respect, EDC is a partner for good businesses looking to doing interesting things. Next slide, please. If we just take a look at some of the 2019 highlights, again, Export Development Canada tends to hit the headlines as far as large value transactions with, let's say, larger corporations in Canada and in abroad as they sort of diversify their footprint. But in actual numbers, if you take a look at it, the bulk of EDC's clients, over 5,500 of them, are small, medium exporting companies. So that would be, companies with sales revenue under 50 million in most cases, supporting business in, approximately 190 markets other than the usual suspects. And we're also a key partner when you're taking a look at opportunities outside of Canada as far as a physical location. So in a lot of cases, there's advantages to either growing sales by being in the same industrial park as a large buyer, a large client that would like you to be a little closer for obvious reasons. So that's another one of Canada's key focuses in EDC going forward, obviously, is how do we make it possible for Canadian companies to set up outside of Canada to take advantage both of some of the inputs as well as some of the opportunities that they see with their main buyers there. Next slide, please. The one fact that I don't think gets enough press, and we're seeing quite a bit of interest as far as, is this something where Export Development Canada can become involved in growing or diversifying the indirect supply chain? So although everybody seems to be relatively familiar with a good or a service which is being sold to a company outside of Canada crossing a border, that can include digital, that can be services, that can be widgets or sales into a larger piece of equipment. EDC is also able to, most famously with the automotive sphere, the oil and gas sphere, we are able to bring our programs to bear in the risk mitigation, financing, working capital solutions in order to support companies that are doing what we like to call indirect exporting. So what that looks like is if you have a tool maker that's selling a tool to a shop in Ingersoll, which then makes parts, sells to a tier 2 or tier 1 that goes into the CAMI plant, we're actually able to support that tool builder in, let's say, Windsor, Ontario, to be able to access more financing, working capital, and mitigate the risk of any issues with the buyer. Next slide, please, is, I think, to Victoria's point as far as EDC's connections internationally, and obviously this is becoming a little more key with some of the uncertainty there, is, how do you find the next good opportunity? And EDC has devoted quite a bit of resources over the space of the last 12, 18 months to diversify the connections that EDC has with large international increase their available supply chain. So I think the most recent example prior to, let's say, February of 2020 was the issues that some of the large Japanese automotive manufacturers had when the Fukushima incident happened, and they realized that their supply chain interruptions from some of their suppliers or exclusive suppliers in Japan was a huge detriment to their own activities. So that's again where what I'd like to put as a resource out there is EDC does have some connections if the standard supply chain, the standard buyer for a lot of companies has been turned on its ear. So I guess in short, if we go to the next slide, as one of my favorite quotes, tongue-in-cheek again, Ronald Reagan suggested that the 7 most terrifying words in the English language to any business was, "I'm from the government, I'm here to help." But I would like to put it out there, at this point, and not having all the answers, unfortunately, is that Export Development Canada, Business Development Bank of Canada, FCC, and all the other partners, including Global Affairs Canada, folks like TechAlliance, we are here to work with Canadian companies to weather the storm. So what does that look like? If we can go to the next slide, I think I'd like to bring up, again, another program that EDC has put a lot of resources into the space in the last, let's say, 18, 20 months, is market intelligence. So what does market intelligence look like? As again, we're finding out right now, we've got a lot of uncertainty on the horizon. Is there a means whereby Export Development Canada can work with Canadian companies that have inquiries, but not enough hours in the day, not enough resources on hand or in-house to be able to pull those down? So if we go to the next slide, the first area I bring your attention to is our website, www.edc.ca. We currently have the most up-to-date information from our shareholder, which is the Government of Canada, on the COVID-19 updates, some of the repercussions to that, what is going on with the Business Credit Availability Program. We have a fantastic economics division headed by Peter Hall, who has put together, again, quite a bit of resource into webinars, online information, access to new markets, how to access new markets, who to be contacting there. And it's really relatively straightforward as to how to get in touch with that information. So there's a 1-800 number directly, or by emailing trade advisors at edc.ca, they are able to put together some pretty fantastic resources from what I've seen, because I get CC'd, as to, you know, some of the information that if you've got a new inquiry from India, or you're looking at how to source supply from Vietnam versus a standard Chinese supplier, a really great wealth of information as to at your fingertips that you can easily email off, or again, I'm more than happy to be conduit for it, which I've been more busy with this area than I have been in quite a while. But suffice it to say that there's quite a bit of information on the website, which is being, unfortunately or fortunately, about the only thing that EDC does that's free. So we'll stay with that. Victoria, how are the questions looking at this stage?
We're getting a few questions in, Cam, but I think
Okay.
if you'd like, we can keep going and maybe wait till the end.
Okay, sure. Yep.
Okay.
So again, Victoria's manning the questionnaire, so feel free to reach out to her. We'll take care of those at the end, but I thought I'd take a pause there and see how busy it was. The next slide, please. Non-payment risk, obviously, with a foreign client, foreign customer, or again, indirect export into the automotive stream, into oil and gas. We've got several of these indirect platforms. This is obviously going to be a key one with a lot of the changes that are happening to the supply chain. So this really falls under EDC's bucket of, if you want to call it, risk mitigation strategies, really to plan for risk. So I think that everybody's probably, you know, woken up several weeks ago to find that the world has been turned on its ear. So this is only one tool, but I would be remiss in not suggesting that we do have some other tools that are available. I'll forward a very good contract guide that EDC's put together, which, although it's not legal advice, so there's a very large disclaimer at the front of it, I'd highly recommend taking a look at it with your legal team to revisit things like contract wording. And the reason that's key is that if there aren't, you know, some key provisions around force majeure, act of God, legislative arena, which any sort of disputes will be handled in, these are things that really need to be revised to avoid risk as much as possible, is reduce the amount that you're putting into any sort of relationships as you look at, let's say, expanding the supply chain, looking at new suppliers, risk with the buyers that you're currently looking at. And in addition, if we get into the next slide, which again, non-payment risk with a foreign customer, just a short example here of risk transfer. So in that respect, Export Development Canada, I guess it's probably flagship program that we're known for, is the ability to, for a Canadian company, to outsource the credit due diligence on a buyer, which is key. Most folks are pretty comfortable assuming a new buyer. You're relatively tight on the amount of trade credit that you're able to provide. But all over the world, what I think we're going to be seeing is people looking for alternative sources of supply. So as things change with China becoming, you know, a alternative supplier, people are looking at sourcing different supply, but other people, other companies will be looking at, you know, Canada as a very good option, very high level of service industry. Digital space has come along fantastically in the space of the last decade or so, as well as the advanced manufacturing ability in Canada. People are going to be looking at different sources of supply. So, for example, this one is a food distributor that we worked with, a Chilean buyer, wasn't interested as much in sourcing from some of the current suppliers, and they've come to a Canadian supplier looking for trade terms. So this was a one-off. It was a hit on a internet site. They wanted to see whether or not EDC knew the buyer. So again, it wasn't something that they were actively engaged in as far as exporting to Chile. However, EDC was able to get comfortable to ensure that receivable on trade terms, which were a bit more favorable than the Chilean buyer's other suppliers. As things tighten, I think that everybody is going to see this happen. And what it did allow them to do was open up a new market. They've got a new relationship. They're, you know, the Canadian companies, standard buyers may or may not have changed their own position, but this gave the Canadian company the ability to take on a new buyer, offer attractive terms, win the business, and effectively transfer the risk of non-payment to Export Development Canada. I'll leave that one where that is. It's relatively straightforward. But if we go to the next slide, what you'll see is that we do have, in this example, it's going to be the automotive stream. We've got an exceptional advanced manufacturing, particularly in the automotive sector, due to the fact that we've had such a base of it in Windsor, Brantford, around the Toronto area. And it may surprise some folks to know is that we've introduced there was a company out of Southwest Ontario, I'll leave it at that we introduced to BMW, and BMW was absolutely shocked at the level of quality that they found in Canada. They had no idea. So that's, again, bringing in our connections with an international buyer to a Canadian company that would have had a very difficult time opening the door to BMW. But what the buyer was looking for in this specific example was they were looking for a tool that was going to take approximately 6 months, and they were looking at production part approval process terms, which in a lot of cases, now it's being even more stretched, can be, upwards of 18, 20 months. So the automotive, company that we were working with in Canada was worried, that should they begin the build process, which took approximately 5 to 6 months, that, if the contract was canceled prior to this contract becoming a firm receivable, they'd be left with an unfinished chunk of steel on the shop floor, and that they were worried about their bank being able to include that long-dated receivable on a borrowing base calculation. So this is how a receivable policy, or what in this case we call a cost and receivable policy, was both a risk mitigant as well as a financing tool. So this particular company was able to engage their financial institution, and due to the fact this long-dated receivable was insured with Export Development Canada, they were able to include it on their borrowing base calculation, which in most scenarios with most financial institutions, there's a period of 60 to 90 days, comfortable trade terms, and maybe 45 days or so past due, where they'll include it in the borrowing base calculation. So long story short, this protected the Canadian company from not only taking on the build, helped them finance the build, as well as finance their buyers so that they were able to win the order versus, again, let's say a similarly technologically advanced Canadian or German firm that wasn't able to offer such beneficial terms to the buyer. So lots of ways that you could tackle any individual conversation. I'll jump to the next one, working capital. This one is a little bit different because what we've done here, and this is what, again, we're seeing with supply chain tightening, is that if you've got, let's say, a long relationship with a supplier that you're now having some issues with, you may be in negotiations with other suppliers in order to, diversify supply base. It's all part of, minimizing the risk as much as you're able to mitigate it. But in this scenario, it's very difficult in a lot of scenarios to be able to extract, or if you want to call it that way, or negotiate more favorable supplier terms. So in a lot of cases, what we see in China and Southeast Asia, their, I would say, minimum requirement, particularly for a new relationship, would be that your supplier had to be paid at least 90% up front, and then that supplier in Southeast Asia may give you a certain amount of terms on that 10% that's outstanding. So how does this really impact the working capital position of the Canadian company? It's a huge detriment, because you have to be paying your suppliers up front, then incorporate or rework or onward sell, let's say, some of the production that you're receiving from your supplier, and that leaves you out the funds for the 30, 45 days across the seas, if it's not more, given where things are at these days. Then you have to sell on your own terms of 45, 60 days. So it's a real impact on working capital. So again, these are solutions that we've worked with partners on. So what we are able to do is, again, looking at a new supplier relationship. In a lot of scenarios, it's much more comfortable for them to offer more favorable terms in exchange for a letter of credit issued by a Canadian financial institution of the supplier. So it's a standby letter of credit, which in the terms and conditions of the letter of credit says that if your supplier is paid with 90 days, they have access to the standby letter of credit, and then, you negotiate or go back to, your 90% up front. But if you're able to negotiate these terms with this letter of credit, EDC may be able to guarantee the value of that collateral that's typically held aside by the Canadian financial institution. So again, long story short, I want to leave enough time for questions, but by using a standby letter of credit in a new supplier or an existing supplier, negotiating better terms, then able to free up that working capital with EDC's guarantees. So not only is the Canadian company in a better working capital position, but you've got a better relationship with a supplier, which may ordinarily be paid upfront. And if we go to the next slide, I'll go into one here where if you're able to, going into the new economic realities here, look at negotiating progress payments, milestone payments. A lot of large international companies outside of, let's say, North America, so surety for a lot of folks will be relatively, more common if you're going into a situation in the U.S. However, if you're going international, what they typically will require in exchange for advance payments, bid bonds, let's say progress payments, performance bonds, labor material, warranty bonds, we look at lease bonds, things like that, where they're ordinarily going to be requiring a letter of credit in exchange for those progress payments. It's a different negotiation, but it also puts you in a bit of a zero-sum game. So if you win the business based on their down payment, so they give you, let's say, 10% of the contract, but they require a standby letter of credit for that full amount, you're in a very similar working capital position than you would have been if you weren't able to negotiate the downstrokes. So EDC, again, using our balance sheet, we're able to look at providing the financial institution, which is issuing the letter of credit back to your buyer, again, in exchange for these progress payments or downstrokes, freeing up the working capital so that you're in a much better working capital position to get the engineering, start purchasing from your own suppliers. And it's a very comfortable situation in so much as your buyer, let's say in this case it was a UAE buyer, is much more comfortable providing the progress payments or the downstrokes than they would be if they didn't have that standby letter of credit in hand. So again, it's a vehicle using a standby letter of credit. At the end of the day, though, it's a significant improvement to a working capital position. And again, although unfortunately, EDC, there is a cost involved, if it's a difference in being able to have a stronger, if you want to call it, position when you're negotiating, I think it works quite well. For some of my clients, it's absolutely critical. So, Victoria, how are we doing there? Have we had an uptick in questions? You want me to keep going into some financing options?
Yeah, Ken, we do have a question regarding financing and kind of what tools are available in terms of outlining what options there are in terms of the financing abilities.
Yeah, sure. I guess that's more referring to the $10 billion rollout at this stage, right?
Yes, I believe so.
Okay. So again, if we just click to the next one, which is financing, and we'll see how far we get past that. So I guess the financing is probably one of the bigger questions, and I will issue a caveat is that due to the fact that it has been a relatively rapid rollout, we don't have the final structuring, but I will put out several of the conversations that I have had with the few partners that we have had already. So Business Development Bank of Canada is looking at their existing guidelines around the amount of capital that they've been asked to move into the system. So what they have is up to a $2 million facility. And without getting too far into details, again, I'd be more than happy to take this offline if anybody has any specific questions for them, or put them in touch with the local Business Development Bank of Canada contact. So the facility that they have is $2 million per borrower. It's a 12-month interest only, and then a 24-month payment of principal and interest past that period, so a total window of 36 months. They also have a very quick online process up to $100,000, which is very straightforward. So the idea is that it's very streamlined, and it can be done online without even contacting a Business Development Bank of Canada person. The other Crown agency, Farm Credit Corporation, if any of the folks online are actually working with them, is that they've already instituted principal holidays for existing clients, and I'd be more than happy to introduce any of them to the contacts that I have in the London area, London, Woodstock, Brantford, Windsor area, if they'd like to have any discussions with Farm Credit Corporation, which can include interest in the food and beverage. And EDC has most recently, again, some of the structural discussions are still ongoing, and I apologize for that. But unlike some of the financing crowds that we do have, due to the fact that EDC does work with several, if not many, partners, as well as the fact we've got more than several business lines, including insurances, broker relationships, insurance, reinsurance agreements, financing with the bank partners, as well as contract insuranceing and surety companies. We are still working out some of the finer details on it, but what that's looking like is a guarantee of amounts up to $5 million if it's just straight under the C19 financing envelope, and the intent there is to work with a financial partner. So I would recommend that if folks haven't chatted with their financial institution lately, that may not be a bad conversation to have, at least initially. And again, more than happy to chat directly with anybody that would like to reach out to me. Is that sufficient for now?
Well, that's great, Cam. Keep going.
Okay. All right. I'm just going to run quickly through another couple of examples here on the financing. So if we go to the next one. So this was kind of an interesting one. I'm actually looking at one right now. It's a local Southwest Ontario company that actually has some very promising products in the antibacterial, disinfectant, if you want to call it that type of material, where they've just landed a large contract with New York Transit Authority. So they had a product which wasn't really doing much for years, more or less just one that languished on the product development shelves, and they've just received an order for about $750,000. So the issue that they have there is obviously how are they going to be able to fund the capital costs required to come up with this amount of product, even though they're making it out of London, Ontario. And so what we're looking at working with them on is setting up a guarantee for a facility, so a credit facility specific to the costs incurred in the contract. So what does that look like? Bank will put together the facility. EDC is guaranteeing it up to 75%, and they have access to the cash they need to cover the costs on the contract. So next one, if we want to go to the next one, this one is something that we're seeing again where we've got facilities located outside of Canada. So it's an outfit that's setting up a shop and facility. They want the subsidiary to have their own access to capital. So again, think about if you're setting up in Mexico, this one was Sweden. We issued a guarantee which backstops a letter of credit. And the letter of credit was used to set up that facility, so set up that upline in Sweden. End of the day, the Canadian company had a Swedish facility with their own operating line. They weren't coming back to the Canadian banks. Much more streamlined access to cash. If we go to the next one, this one was kind of interesting in so much as that they were looking for equipment that they were going to co-locate with some of their buyers. So it was more a facility that's, access to cash to put equipment into some of their buyers' own locations. Bank wasn't quite comfortable with the security package, so EDC guaranteed that. Allowed them to, again, first mover advantage. They didn't have to draw down their own available security in Canada to do that because the term loan was 100% guaranteed by Export Development Canada. And another one that was looking at setting up a facility, if you want to call it that, like an actual, equipment manufacturing facility. This one was in South Korea, where again, EDC did a direct lend to the subsidiary. So caveat to that again at the end of the day is that Export Development Canada is here to fill gaps in the market. But if we don't have a partner, if this is security or equipment or an investment that's located outside of Canada, EDC does have a direct lend ability, and our risk appetite in markets afield is higher in most scenarios than it would be for a Canadian financial institution. And it is in most of the scenarios that I've worked with, it's more difficult for, a Canadian company to go set up a term loan or get financing for any sort of equipment that's located outside of Canada with a bank in, South Korea, Sweden, Italy, Germany, whichever. So that, I'm going to leave that with the examples. If we take a look at, a few of the items that we were looking to cover here, monitoring the impact of the virus, please, as I said, edc.ca. The front page right now is our update on the COVID-19, as well as the plethora of other, get CBC in the background here with the hour-to-hour updates. It's very difficult, and I do apologize. I wish I had more information how the outbreak will impact the global economy. Suffice it to say that monitoring that on an ongoing basis, expectations are once the original virus impact has subsided to some extent, there should still be some opportunities, particularly for foreign buyers, U.S. buyers, Mexican buyers that are looking to diversify supply chain outside of China, which may or may not have already happened with the U.S.-Chinese trade war. I hope that we have covered how to protect company against the risk of not getting paid, either through a pure risk transfer from accounts receivable insurance, some of the contract wording and guiding, again, or guides, I can send those along to Victoria to disseminate to anybody that's interested. And working capital from your bank, again, there's EDC's guarantees. The immediate, as I mentioned, was, my understanding, is up to about $5 million to provide enough liquidity into the market to keep things moving. But there's several, if not many, different permutations depending on where the plans go. So I'm guardedly optimistic that, as I said, once the impact of the virus has been properly quantified, addressed, that there will be better times on the other side of it. I wish I had more information on that, but more than happy to field questions directly at any point in time. Please reach out to the trade advisors at edc.ca if you have specific questions, and or field them, working in conjunction with good partners like TechAlliance. Hopefully we can get as much information out to anybody that has required in a timely manner. So with that, Victoria, any other questions? Anything that's popped up?
Yes, I do have one question that's come in here, and it says, regarding the funding for COVID-19 and the stimulus funding, what opportunities are there available? Will there be any new programs, or will funding flow through your existing programs?
It was a little bit garbled, but as I understand it, that was funding under the COVID-19, is that correct?
Yeah, can you hear me now?
Still a little garbled, but yeah, so financing, as I mentioned, first stop, I would suggest to see where the banks are at. Speaking of a lot of the big credit unions, they are quite accommodative as far as some of their own policies, and I won't throw any of my, my bank friends under the bus, but that would be the first call I would make. There's BDC, so online application under 100,000, up to 2 million available through contact with a BDC representative in London, who I'm more than happy to make the invitation to. If in your discussions with your financial institution, they're not able to get the level of financing liquidity required, please have them reach out to me. I'm more than happy to put my commercial banker hat back on and chat with them about how far we can get with the guarantee. And there are, maybe I should have mentioned this before, is there are still several programs that they may be able to, or Canadian companies may be able to take advantage of as far as the grant programs that are out there. So there's several, if not many, private firms or accounting firms that have the inside scoop on some of the grants as well. Again, very, very fluid landscape. I've heard quite a bit of discussions around, the economic development corporations within municipalities that are looking at options. So quite a bit of information out there as to what's available.
And Cam, we have another question that's come in terms of advice and recommendations. What advice would you give to some entrepreneurs as they prepare for changes within the global marketplace? And what are the next steps you think that an advice you can give to manufacturers?
Well, two, I guess. One would be work on your plan B, C, and D at this stage. We do see a lot of folks that will take a look at, okay, well, what if this happened? What would we do? And what if this happened? What would we do? The next point I would be looking at is diversification of supplier as well as client base. Do you have the ability to quickly change from a supplier that used to be in China or used to be in Vietnam? Is there some contacts within the local chamber of commerce? Are there more local sources of supply? Because with a lot of these, and this may speak to manufacturing as well, is this a scenario where you start to look at 3D manufacturing for some of the more critical parts that you may or may not be able to source from your standard suppliers? And then the last one I would suggest is take the opportunity now to try and source as much liquidity. Get your hands on as much cash as possible. I would like to say that this would be over in 2 weeks, but I don't think anybody knows. So in this case, we've had some discussions around cost of capital in the last few weeks, more than a couple of those. Cost of capital at this stage is definitely a factor. I'm not going to suggest it isn't. But right now, I think access to capital will be one of the key determinants as to, who can keep the people that are key to their organization on staff, who can cover overhead as this kind of blows through and hopefully over. I would like to think it's going to be a short-term change, but I don't know that it will be. Obviously, if I knew, I would share it, but I really don't know. So those three things, what's your contingency plans in scenario A, B, C, and D? What would you need in order to find new suppliers, new buyers? And access to capital is going to be key. So.
Well, thanks, Cam. And then I guess the other question that came in is regarding applications. Is there a special process that's being put in place for funding?
Yes, BDC has provided me, there's 4 forms that they require. So I have those, or again, reach out to the BDC contact if you have one in London. If not, we can put you in contact, or any of the companies in contact with them. And those are amounts over 100,000. I have a link for amounts under 100,000. And for Export Development Canada's guarantee, the first stop would be with a financial institution, would be my suggestion. And I don't mean it to be rude by any, stretch of the imagination, but it's just it's a question of bandwidth at this time. We've got, let's say, 7 account managers at Export Development Canada that cover Southwest Ontario, west of KW, versus the several thousand commercial bankers. And what we're doing at a higher level within EDC, we've got a group stood up that manages the bank relationships. So we've got them reaching out to the financial institutions to let them know our own program parameters. So if you have companies that get the deer in the headlights look as to what Export Development Canada is, please introduce them to me. More than happy to walk them through it. But that would again be what I would recommend as the first step, is reach out to a commercial account manager that you may or may not be working with at this stage, see what level of liquidity they're able to get comfortable with, and if it's not quite sufficient, please have them give us a call.
Well, thanks, Cam, and thank you for those questions and the presentation. And to wrap things up, I just want to talk about next steps. In recognizing some of the companies on the call today, each of you have your own individual situation and needs, and so you'll have an opportunity for one-on-one consultation with Cam during TechAlliance virtual office hours, which starts this Friday. So following this presentation and webinar, a link to register will be sent to you. And overall, though, during COVID-19, we've seen an outstanding collaboration between our partners and the community coming together. And this really signifies our commitment to you to support you during this unprecedented time. So I just want to wrap things up. Cam, if you have any last words.
No, just thanks again to TechAlliance team, and particularly the companies that are taking some time to hopefully learn a bit more. I wish I had more answers, but I think the emails started really flying last Saturday, and since then we've kind of been formulating our own strategies going forward. So thanks again, and kudos to TechAlliance for putting this together. I hope there was some value to the folks that joined in. But please feel free again to throw my coordinates at any of the attendees if they have any other questions. If I don't know the answer, I can certainly do a little bit of digging around some of the concerns they may have. Don't pretend to know all the answers. I'd be silly if I did, right? So.
Well, thank you, Cam. We look forward to getting more updates as the COVID pandemic continues and the funding opportunities that are available for entrepreneurs and businesses that are expanding globally. So I just want to thank you again, Cam, for joining us today, and thank you for everyone on the call. So thank you.
Yeah, thanks again, everybody.